Howdy out there, folks. This is Darius Dale here to present our macro minute for Thursday, May 5th, 2022. Starting with markets, we have stocks mix this morning with U.S. equities lagging, commodities mix with agriculture leading, crypto down, dollar up, global bond yields down. Market moving headlines. Obviously, yesterday's Fed meeting took the cake for those of you who have their heads buried in the sand. With Fed hiked rates as 50 basis points as expected. They announced their quantitative tightening program. They're going to start off at a monthly pace of 47.5 billion, incrementally raise that up over the next ensuing 3 months to 95 billion. What was really interesting that we thought the markets obviously came into the day with a decent amount of put exposure, short delta put exposure, short dated short delta put exposure, and that got unwound on for two reasons. One, you had the 75 basis point rate hikes taken off the table, but more importantly, the Powell confirmed that the market's expectations at the neutral rate had not moved up, or sorry, confirmed the Fed that the FOMC members had not moved up their neutral rate expectations, which meant, at least for a brief moment, that the pricing that we're seeing in the euro dollar market and the pricing that we're seeing in the OIS market, overnight index swaps markets, et cetera, fund futures, et cetera, was a little bit too aggressive relative to that very short period of time. But then he obviously reiterated that they're comfortable taking rates past neutral. And I think that's what's weighing on markets today, which is this, we have not taken off the hawkish right tail policy, even though for a brief moment in time we did yesterday afternoon. We'll be writing about that in our updated leadoff morning note in terms of how much sort of upside risk we can see in this market as a function of a lot of those dynamics in terms of taking off the sort of, or at least the market believing that the hawkish right tail had been removed, and sort of talk about kind of what kind of upside we can see in risk assets between now and the inevitable going forward. Shifting gears, BOE raised interest rates to the highest level since the GFC and warned the economy is on pace to contract in the fourth quarter of this year and throughout 2023. Pound is getting hammered on that, down 1.6%. It's down almost 5% month over month. That's a huge move in the currency market. And then tomorrow we got the payrolls report. All eyes on wages, all eyes on the level of labor supply that's sort of coming off the sidelines from an unemployed workers' perspective and labor force participation. But we also have New York Fed President John Williams coming out, Atlanta Fed President Raphael Bostic, Fed Governor Chris Waller, my man James Bullard, and ultimately Fed President Mary Daly, all speaking tomorrow. And so anything that we price into markets today that might get a little bit offsides relative to what Powell tried to communicate yesterday will very much likely be rectified by our friend Jim Bullard, et cetera, tomorrow. So don't get too far over your ski tips in terms of risk today in either direction. Big movers this morning. DAX up 1.6% to minus 2.2% month over month. And then the MSCI Emerging Market Index bucking the trend there, down 1.6% to down 9.1% month over month. EM is really struggling with this really strong U.S. dollar. Speaking of the dollar, shifting gears to our charts here, looking at our volatility adjusted momentum signal and probable range processes. U.S. dollar still bullish, fam, still ragingly bullish, fams, but had a nice correction on yesterday's move. Yesterday's sort of very brief dovish, like the 10-minute dovish pivot that ultimately is getting unwound today. Obviously, we kind of a fair fight here in the probable range, minus 1.2% of downside versus 1.7% of upside. Gold neutral VAMs here bouncing on the dollar weakness. You got 1.8% of downside versus 3.9% of upside there in the probable range. 10-year nominal treasury yield still bullish VAMs, 17 basis points of downside, 17 basis points downside versus 24 basis points of upside, not really reacting as aggressively as the currency market and the equity markets did. Again, a lot of the positioning was very one-sided in both of those markets into the event. It's getting unwound, or got unwound rather. High yield OAS, neutral VAMs, had a big correction yesterday as well, alongside the rise in equities. Went out to got a fair fight here, minus 33 basis points of downside versus 35 basis points of upside in its probable range. S&P 500 still still bearish VAMs here, minus 7.5% of downside versus 12.5% of upside in its probable range. VIX neutral VAMs here, fair fight as well, 27% of downside versus 35% of upside there. NASDAQ 100 bearish VAMs, minus 10% of downside versus 3.7% of upside. Russell 2000 bearish VAMs here, minus 8.5% of downside versus 3% of upside. So that's, the S&P, NASDAQ, and Russell all have more downside than upside currently in their probable ranges. So be aware of that. Same thing with Bitcoin and Ethereum. Bitcoin still bearish VAMs, minus 12% of downside versus 3% of upside. Ethereum bearish VAMs, minus 14% of downside versus 4% of upside. Shanghai Composite, not much fall through, but a little fall through in terms of what we reopened with post Golden Week, minus 7% of downside versus 2.2% of upside. New WTI crude oil, neutral VAMs, minus 12% of downside versus 5% of upside. And then ag back on the grind higher, back on the grind, minus 2.8% of downside versus 3.5% of upside. And then industrial metals, neutral VAMs, still at the lower boundary of its probable range. I mean, this is not a chart that looks like things are going to get extremely stimulative in China. Again, we continue to get a lot of rhetorics. We got to see the follow through in the coming weeks and months as China comes out of lockdown, see what that actually looks like from a fiscal easing and monetary easing perspective. So definitely on our watch list, but certainly not doing anything with that today. So happy Cinco de Mayo out there for those of you who celebrate. I can imagine many do. It's a fun day to get out, enjoy some sun with your family and friends, and have a couple cocktails. So catch back here tomorrow morning. Cheers.